Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you. And before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Hi, it's Tuesday, September 13th, 2011. I'm Rob Booker, and this is the Bossilator Watchlist webinar. We're doing a series of special watchlist webinars at the very beginning of the course here that last a few minutes every once in a while to help you sort of get acclimated to the actual material and the Bossilator itself. The Bossilator, for those of you that are not familiar with it, is a measure of time. It's the length of time that a currency pair or stock has spent away from the 800-period simple moving average. The 800-period simple moving average is the black and white moving average running through the top of my screen. The Bossilator radar screen, located here in the upper right-hand section of my screen, measures, under the red bars section right here, the length of time that this currency pair has spent away from the 800-period simple moving average. On average, a currency pair or other financial instrument is generally only able to spend about 250 bars away from the 800-period simple moving average before returning. So on average, it doesn't spend very much time away from it. When a currency pair or other financial instrument seems to spend, or does, spend a significant period of time away from the 800, you then know that the world has stopped spinning in the correct direction. Something is definitely wrong. Dogs and cats are living together and mass hysteria. It's a time when we stand up and take notice and decide that maybe, just maybe, we want to become counter-trend traders. We want to break the rule about trading with the trend, and we want to look for a trade, in this case, that would go up against this massive downward trend that seems to have lasted forever. Now that seems like a crazy thing to do unless you realize that less than 5% of the time is a currency pair or other financial instrument able to spend 1,500 bars away from the 800-period simple moving average. Right now, the Euro-Canadian gets the prize. This most excellent web-based radar screen that you can find on piptoring.com, which is located on the Piptoring website, and I will link to from the home page of the Piptoring website, and I will link to it inside of the chat room on the webinar software, and I will link to it inside of the main Campfire Now chat room for the pivoteers. This shows the length of time that each currency pair has spent away from the 800-period simple moving average, which is totally awesome. And you can see the EuroCAD here is a red. EuroCAD, blink, 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 red. That's exceptional. That's what we want to look at. We want to look at things that are red for counter-trend trades. There's a whole other way of looking for trend trades, but that's not the focus of the webinar tonight. Tonight I'm going to do a short introduction, reintroduction, short description, short explanation of the counter trend. Let's go back to the EuroCAD. We found it on the watch list. We knew that we wanted to look at it from this entire universe of time frames and currency pairs because we looked at the watch list. Saves time, saves money. It's awesome. And we looked at the Euro-Canadian dollar. And what I want to do now is say, well, gosh, if I was going to buy this currency pair, how the heck would I do it? What is it that I could do in order to buy this currency pair? What could I look for? And I'll explain in just a few moments here in the remainder of our watch list webinar. We're going to look through 3 or 4 different ways that you could look for a buy trade, which is against the trend, right? I mean, it's definitely against the trend, but we're looking at a statistical probability now that it's time for it to go back to the 800-period simple moving average. Counter trend trading can be immensely time-consuming because you have to wait a long time for a trade to set up, and it can also be very rewarding. It can also be super frustrating because when you fight the trend, you can stop out repeatedly. That's no fun at all, and some of you don't like it. For those of you that don't like it, join us tomorrow, and I'm going to do an overview of some trend trading techniques using the Bossilator. All right, I promised you that I would talk to you about what entries would look like on the EuroCAD. If we know we like it, we know it's 1,500, and we know we might consider buying this currency pair, where would we consider taking a trade? Let me look at a couple different ways that you could look at it. I'm going to draw a trend line underneath these candles right here. There is a underlying trend line. This currency pair, you could say, has been trading not inside of a channel, but you could say it's been inside of a descending wedge, descending wedgie. I used to get those in high school all the time, descending wedgies. And you could see here that there's a line underneath this currency pair right now. You could put one line there, and you could put another line that's a little bit different. And I'm going to put both of them in there. So you could look at that. And then I'm going to put one more line in here. Just going to color this something different. I'll color it red. All right. There are a few places that I could look for a buy trade. A buy trade at the red line, if it dropped, that's pretty quick. That's pretty soon. A buy trade down here would be unbelievably better. It's a weight. It's like 100 pip weight. Wink, wink. Downward. But that would be kind of worth it, because if we got down into this area down here at the bottom, we could also theoretically on the 5-minute chart, we could go oversold again on the 5-minute chart. And that would be interesting to me. I would be interested in that. That would be exceptional. So that's kind of number one on my list. I like that a lot. The 15-minute chart is already oversold and coming back up out of oversold, but we're not trading this from the 15-minute chart. So that's not really something that matters. We're looking at this from the perspective of the 5-minute chart. So I like a bounce off of that trend line. I like a bounce up out of oversold down here on the regular stochastic. A daring buy trade would be a buy trade above this Mesa line or this table right here. Support over here, resistance right here, a break and a close above that level, and a move to break even at the 200 right here. That could be very interesting, and I would like to consider that type of a setup. I like that too. I like the trend line, I like the oversold stochastics, and I like the trend line underneath the currency pair. You could also draw a trend line underneath the currency pair like this. That was the closer trend line of the two, and I don't like this one as much. I like the longer term trend line that I showed you just a moment ago right here. I like this better. I'm just extending this trend line out. The EuroCAD is the most important item on anybody's list right now. If you are a counter trend Bossilator trader, it's number one on the list. If you are a Wallaby divergence trader or a pivoteer, you know, we've got a pivot that hasn't been hit yet, and this currency pair could continue to fall, and it could produce bullish divergence down here in this area after completing a 90 pip trade. That could happen. It's happened before, and it could happen again. Let's take a look at questions from the pivoteers. None. Dan's caught up in bakery work. That's awesome. No questions. On the home page of the Piptoring forum, no chat room questions. I must have been brilliant tonight. Most likely not. Let me say it again. If you were creating a watch list for currency pairs on your radar screen that you wanted to think about trading in a counter trend fashion, the Euro-Canadian is the way to go. It is the number one most important one on my list tonight. A standard Wallaby divergence trader. Wink, wink to those of you who live in the north suburbs of Arizona, Phoenix area. If you are a standard Wallaby divergence trader, you would possibly combine this massive overextension on the 5-minute chart with bullish Wallaby divergence down here if it does produce divergence. And that could be of interest to you as well. However, standard old systems that we have taught in the Bossilator course, the Mesa trade above, the trendline trade below, waiting for it to go oversold, would all accomplish almost exactly the same thing. Tight stop, big profit target at the 800 period simple moving average. That is the focus. That is the most important item on the watch list for this evening. Does anybody have any scintillating conversation? 5, 4, 3, 2, 1. Thank you for joining us on the recording. I'll stay on the live webinar for a few more moments.